You need a valid motor vehicle insurance to drive a car or to ride a motorcycle. With a change in lifestyle with at least two in every family working, it's not uncommon for families owning multiple vehicles. That being the case, it's really a hassle to purchase and track insurance for multiple vehicles. Will it not be easy and helpful if there is only one insurance policy covering all of your vehicles? Welcome to Nana's Learn Better. Use this channel to enrich your knowledge in personal finance to take informed decisions. Do subscribe to the channel if not done already. Like a family floater policy in health insurance that covers all the members of a family, a motor floater policy or a multi-vehicle policy is a single motor insurance plan covering multiple vehicles in a household without the need for individual insurance policies. This type of motor floater insurance policy covers all private vehicles, cars and/or two-wheelers registered under a single owner. You can cover up to a maximum of 5 vehicles under this plan. When buying this policy, you have the option to select standalone coverage for own damage or comprehensive plan for all vehicles at once. So, what are all the advantages of going in for a policy like this? 1. A floater motor insurance will save a lot of time as you need not purchase multiple insurances for your vehicles. With reduced documentation, you do not need to remember all the renewal dates of several policies. 2. It is very easy to add or delete vehicles from this policy. You can do that from a smartphone app. 3. You get a multiple vehicle discount in premium as you cover multiple vehicles. And hence, the premium is relatively cheaper when compared with the sum of all premium of individual policies for different vehicles. Okay, how this works? The motor floater insurance works the same way a normal motor insurance works. For simplicity, you may consider this as an add-on cover that will cover more than one vehicle in the name of the same owner. You take a single policy covering all your vehicles registered in your name. Mid-term inclusion of vehicles can be done by paying a pro rata premium for that individual vehicle. When you have several vehicles with different IDVs, the vehicle with the highest IDV, that is insured declared value, will be considered as the primary vehicle. All other vehicles under the plan will be considered as the secondary vehicles. And the highest IDV will be the sum insured amount of the floater policy. With every claim, the total sum insured of the policy reduces. For example, if you have 2 cars and 2 motorcycles with the details as shown here under the motor floater policy, Toyota Corolla Altis will be the primary vehicle and the sum insured will be Rs 14.40 lakhs. So, what is covered under this kind of floater policy for the vehicles? As already mentioned, you have the option to select standalone coverage for own damage or a comprehensive plan. In the case of a standalone own damage cover, like the regular vehicle insurance policy, the floater also covers damages to the vehicle or vehicle accessory due to an accident, fire, or electrical components failure, improper handling during transit, natural disasters such as flood, earthquake, cyclone, etc., and also the damages to the vehicle due to man-made calamities like riots, theft, etc. In the case of comprehensive cover, that's the own damage with a third party, the policy will provide coverage against own damages and damages to third party property and also injuries or accidental death of the third party. Okay, what are all the exclusions? The multi-vehicle motor floater policy will not cover the repair or replacement of wear and tear of components of the vehicle, depreciation cost of the vehicle, damages to the vehicle due to mechanical or electrical breakdown, driving under the influence of alcohol or any other intoxicant substances, driving without a valid driving license, and reckless driving or improper handling of the vehicle. If you see closely, again, this is the same as that of a regular vehicle insurance, nothing different. Okay, what about the no claim bonus? Is that available under this floater as well? No claim bonus works like the regular standalone motor policy. That is, if you do not make any claims during the tenure of the multi-vehicle policy, the no claim bonus will be applied to the renewal premium. It's applicable even if you change the insurance company. What happens if the insured vehicle or vehicles are stolen or lost? Under the motor floater insurance policy, the own damage cover of all the vehicles will stand cancelled if the primary vehicle suffers a total loss or is stolen. If any of the secondary vehicles suffers a total loss or gets stolen, then that particular vehicle will be removed from the floater policy, and if all the vehicles covered under the floater policy suffer a total loss in a single incident, then the policy will be entirely cancelled. Okay, let's assume that you already have separate insurance policies covering your vehicles. What happens if you plan to buy a motor floater? If your vehicles are already covered under a regular insurance policy, then such a vehicle's cover will be cancelled and the insurance company will make a proportionate refund when you go for the floater policy covering all your vehicles in a single policy. Okay, but what about transfer of one or more vehicles covered under this policy in a situation like sale of vehicle or vehicles? It works exactly the same way as that of a regular individual policy. That is, the insurance company, upon request from the new owner of the vehicle, will acknowledge the transfer with the consent of the current owner. However, if a single vehicle is to be transferred to a new owner, then that vehicle will be removed from the floater policy and the proportionate premium will be refunded. The policy also allows for transfer of all vehicles if the vehicles are transferred to a single owner or entity. Okay, it all sounds very good, but are there no disadvantages at all in this policy? Since this policy combines more than one vehicle with only one premium renewal date, it may be possible that some of you may find this heavy on your pocket as the combined premium in a floater policy is more compared to the individual premium under separate policies. Also, with the new age product like this, the premium calculation could be fully user-based. The user-based premium is calculated based on the usage of the vehicles and the distance covered by the vehicle besides driver's behavior. That means, if you drive safely and follow the traffic rules, the premium will be less. But it will be the opposite if you fall under the category of high risk. This is all about the new motor floater insurance policy in the market, which is a single policy insuring all multiple private vehicles at a relatively low insurance premium, providing all the covers of a traditional motor insurance policy, plus the advantage of adding and removing vehicles in between. See you in another video. Till then, this is Narayanan Viraya from the channel Nanas Learn Better.